Goldfields has signed a 3-year wage deal with its registered trade union, NUMN and UASA, and at its South Deep operations. But to tell us more about this particular deal is the Chief Executive of Goldfields, Nick Holland. Nick, thanks for your time. Tell us about this agreement and the rationale behind it first.
Well, first of all, South Deep is the only fully mechanised gold mine in South Africa. So we've been thinking for quite some time that we need a different approach. And one of the reasons is that we source the skilled labour for South Deep outside of the gold industry itself. We look at platinum, we look at coal, we look at ferromanganese, etc. That's where we find the mechanised mining skills. You know, people who can operate the drill rigs, the loaders, the trucks, and the supervisory controls behind that. So we realised that if we're going to attract those people, and I've mentioned on your program before, that's one of the key impediments behind Goldfields' lack of progress on South Deep is skills. If we need to attract those skills, we have to benchmark ourselves against those sectors. And so that's what we've done, and we decided that we need to be competitive with the salaries and wages that are being paid by Platinum in particular if we're going to attract people. So for us to do that, a collective approach to wages didn't make sense anymore. So we engaged with the Chamber, we engaged with the other CEOs, we explained to them our position, and we said, look, what we need to do is go it alone and do our own deal, because we don't source our labour from your mines. We source really the skills from outside. And we're talking about a nucleus of about 900 people that are in the mechanised section where the skills are required. So it's not a lot of people we're talking about, but we need to pay the right salaries to attract and retain them.
I know Mohammed wants to jump in, but I just have a follow-up. You said that you have engaged with the Chamber, you have engaged with the other companies. Are you not worried about setting a precedent here? How do you think the unions will look at this? They might say you are offering higher wages, therefore in the next the round of negotiations that's coming up, they can ask for more wages.
Well, look, I can't predict what's going to happen between the other gold companies and the unions, because we're not going to be part of that, and we can't influence the outcome. But what I would say is that if you look at the gold mining industry here, there's about 130,000 workers, and there's only 3,500 of those 130,000 workers at Goldfields, and of those about 1,000 are in the mechanised section. So it is a fundamentally different situation. And the one thing that I've learnt in business is that you have to pay the going wage in the market to attract the right skills. Let's assume we decided not to, and we continued to pay wages for truck drivers, rig operators that were below the market. How do we expect that we're going to attract and retain the right skills? So at the end of the day, I think a collective process on wages is a good process, but unfortunately it only works if everybody is aligned. And right now we're not aligned anymore, we're in a different space.
Yes, I mean, so that fundamental distinction in terms of the different skills mix, I mean, that's fantastic. The cynic's view would say that, you know, it's an opening salvo in some respects to your competitors. Effectively, it's an early mover status. From an investment standpoint, I mean, what I like about it, it's a 3-year deal. It's a deal that, I mean, it strips the uncertainty out of it, and it leaves Nick and team to get down to actually doing the business in what is still a very taxing international context for effectively for gold. Nick, your views in terms of a longer term structurally strong US dollar, what that implies in terms of the gold price, and gold miners are inherently bullish about their commodity, their product, and how does Goldfields respond in that kind of a context, considering your very globalized portfolio now? I mean, South Africa is a small portion of the broader Goldfields business.
Well, I think if we look at the gold price in US dollar terms, I'm not very optimistic that we're going to see much change over the next couple of years. In fact, we've coined a phrase internally, you know, sideways is the new up. And frankly, if gold could actually hold where it is for the next couple of years, I'd be very pleased. Now, the one thing that a lot of people haven't spoken about, which has helped us and cushioned the $600 to $700 drop in the gold price, is the fact that the currencies have gone the other way. Now, if we look at Goldfields, almost half of our production is in Australia, and the Australian dollar has moved from over parity down to about 76 cents. That's had a massive impact on our business. And of course the rand. You know, the rand has weakened. I've been watching the rand like you for many years, And I think it's going to continue structurally to be weak against the trade-weighted basket of currencies over time. So I think that's going to be competitive for us. In the longer term, when I say longer term, let's talk post-17. Supply is going to dwindle. Exploration budgets have been cut progressively every year in the gold industry globally since 1995. That's when it peaked, and we've been going down ever since. So we're going to hit a hiatus in terms of production globally. When that comes through, and given the continued demand expansion in China and India that I see, 40% of the world's population love gold, that's great. I think in the long term, the fundamentals will be good for gold. We believe in gold in the long term. Next 2-3 years, going to be tough.
Nick, long term, while we're still talking about that, you said that the bulk of your revenue now comes from Australia. You are looking at listing in Ghana. How important is South Africa going to be? And let's talk about that Ghana listing.
Well, first of all, South Africa is fundamental to us. South Deep is a very important ore body, and it's fundamental not just for Goldfields, but I think for the country, that South Deep becomes a success. It does represent the remaining large ore body at depth. It's not that deep, in fact. It's only down to 3 kilometres. We won't be going beyond 3 kilometres for the next 20 to 30 years. Now, AngloGold, I know, is looking to go deeper with new technology, and I think they're doing a great job, and I think that is going to open up other opportunities in the future. But for us, the key is to deliver South Deep. The Ghana listing, I think, was probably over-reported. We did have a presentation from a couple of advisors outside. I don't think there's any prospect in the short to medium term of us doing a Ghana listing.
Thank you so much, Mohammed. I'm not sure if you want to sneak one quick in. I'm being very naughty here by asking.
Yeah, maybe just as a parting thought. I mean, the Sibanye trade was actually effectively done, and Sibanye initially did very well. The last 12 months, you've outperformed Sibanye. Any regrets in terms of the spin-off of predominantly what is a rump of the South African operation? Maybe some parting thoughts on that?
Well, I think the one good balancing mechanism that we put into the transaction is that we gave it to our shareholders. We didn't sell the mines. All we did is we said to our shareholders, give us back your one piece of paper that you own in Goldfields, and in exchange, we'll give you two. We'll give you Sibanye and we'll give you Goldfields. If you look over the last 2 years since we've done the listing, if you add the two together and you bought a Goldfields share in November 2012 when we announced it, you would have outperformed not only the gold price, you would have outperformed the whole industry worldwide. So I think it shows the deal has been accretive for all shareholders. So I'm delighted that both companies have good prospects for the future.
Thank you.
Nick, thank you so much. That was the CEO of Goldfields, Nick Holland.